Okay, good day, everyone. Today's Sunday, March the 5th, 2023. And this is going to be the beginning of the third month of our first quarter and the third month of the year 2023. So welcome, everyone. I appreciate it. I wanted to chat to you guys, making sure you guys can hear me. You guys can see my screen, which should be the disclaimer and risk warning, right? I'm not going to read this verbatim, but I just want to let you guys know everything that I'm sharing here, my perspective, my trade ideas, my overview of my market analysis is through years of experience, almost a decade of experience, and a couple of years, it'd be damn near 10 years. I got a lot of years of training, a lot of years of failures in the beginning, a lot of years of successes. I've coaching, I've mentored a lot of coaching students from around the world. So I do appreciate all of those who've been part of my journey. And I'm hoping I've been part of your journey and some of the coaching journeys of students out there as well. Basically, just be careful out there. You know, Forex or any market trading, whether you're trading crypto, Forex, currencies, or even futures and stocks, it's high risk, right? We're talking about an industry that is very, very difficult to trade, to learn, and let alone to be mastered, right? Because this is a very difficult industry that's ran by let's say higher market entities, which we call market makers for now, right? And not to get into any type of conspiracy theories, but there's a lot of things that's moving the market. And it's a $6.9 trillion market when it comes to the foreign currencies, over $100 billion when it comes to stocks and equity. So it's a very, very large lucrative market, but at the same time, it's a very dangerous market if you don't know what you're doing. Without proper training, proper coaching, proper practice, and to be honest with you, in this type of industry, without proper mentorship from those who've been in the market for a very long period of time, who's been through it, he's seen it, and who's able to share with you that person's journey from a mentorship perspective to help you be successful based on the trading strategies and experiences that person has succeeded, okay? So everything is here for educational purposes. I'm not a financial advisor, so do not take this as financial advice. It's just not to tell you what you should do, what you will do, or anything else, but more about what I'm doing and how I'm looking at the market. And you use it to your own discretions. And I hope it has helped you with your analysis, with your perspective. And if you're trading, with your trading, which I'm hoping it is paper trading or demo trading. And if you go live, be very, very small, lot size, and very slow risk. I recommend people to trade on demo, okay? So without that being said, got that out the way, let's go ahead and begin. So first of all, we're gonna go right into the fundamental analysis to see what's going on for the week, to kind of give us a perspective. Not that we use fundamental analysis, right, to predict the market, because we can't from a fundamental perspective. We're going to need more information to predict the market, which is our job. Our job is to predict the market, but don't use fundamental analysis to try to predict the news, right? We can predict the market using fundamental analysis in conjunction with technical analysis. So your fundamental analysis, the way we use it at FX Prosperity Academy and the way I teach and the way I coach it, is that we use fundamental news to know when. So we need to know what, and we need to know when. And the when is really going to help us in the fundamental analysis in terms of when the market expected some volatility, and the technical analysis is going to help us to know what, right, in terms of what direction. Okay, so with that being said, let's go through the fundamental analysis to understand, again, when do we expect some volatility, specifically in some of the currencies that we follow, okay? So today is Sunday. Normally Sunday is nothing. Monday is trap day, so be aware of that. We teach Monday in the market maker cycle. Monday is trap day. However, we do have a very big, important financial news. There's going to be a lot of financial news this week, some very big headers. Okay, so let's start with London session. So in London session, you guys can see it right there. We got CPI data for Swiss francs, right? So that's going to have some impact on Swiss francs. They report their inflation rate. They're coming in at 0.6% last month. They're expecting it to come a little bit down. So that is going to have some impact on Swiss francs, which I'm expecting it to be a little bit stronger. So that'll be some volatility on Swiss francs. So anything against Swiss francs, I would suspect Swiss francs to be stronger. But again, we need to see that from a technical standpoint, and we will take a look at that in a few minutes. Okay, so going into New York session, as you can see, this is basically a typical Monday. Typical Monday is not a lot of volatility, not a lot of news. News happens between Tuesday, Wednesday, and Thursday when you get a lot of heavy news, except for like the first week of the month, like this week, then you will include Friday, okay? So on Monday, New York session, expect nothing else other than a normal trap day. So in other words, whatever that we are opening the market for the week, expect Tuesday to be a reverse. So if we start to go up on a Monday for your pair, expect Tuesday to be released. Why is that? Because Monday is our normal trap day, okay? So then we get into Asian session on the close of Monday, and this is when volatility starts to kick in. This will be our first major interest rate decision for the week. This would be in Australia. So Australia is coming in at 3.5. They're expected to raise their interest rate by another 2.5%, just another 0.25%. And we'll see how that have an impact on Australia. Now, with that being said, any interest rate for any currency is good and it strengthens the currency. Now, that doesn't mean that's exactly what's going to happen, but we can go in there and expect it based on what we see with the technicals and hoping the technicals play into the fundamentals. Now, again, that does not mean whatever happens in the news is exactly what we're going to happen, because we can't predict based on the news. We can only say from a fundamental perspective, that's what should happen. And then we just trade what we see. Now, always, even with any type of rate decision, it always depends on what the central bank's comments or the following statements. As you can see, right after cash rate statements, we have what? We have statements. So this statement is the follow-up to any rate decision with any currency, just like the FOMC. The FOMC has their rate decision, and then 30 minutes later, you get Jerome Powell, who's our current Fed chairman for the United States Central Bank, goes on there and has his statement, right? That statement will have an impact on the currency rate decision based on, is it sustained or is it going to be faded? Meaning, is it going to be going the opposite way? Or is it going to be going in the direction of the initial rate decision? So here, we would need to see if the statements that is announced or spoken or released, in this case, the Reserve Bank of Australia, if it is going to be hawkish and sustaining that interest rate, or is that statement going to be more dovish, weak, and we basically fading that initial rate decision if it is a spike, right? Which we would expect from a fundamental perspective. Okay, moving on to Tuesday, London session. We don't see anything in here that is going to be a big showstopper, so don't expect much in the London session for Tuesday. And then we have the New York session. So in the New York session, we just have Fed Powell, the Fed chairman, testifying probably with the, the Congress. And it's not going to be anything but a lot of volatility for indices and sometimes for the US dollar as well. So this will have an impact on Forex. Not a significant impact, but it's definitely going to have an impact in the currency pairs, specifically all of the dollar crosses. take this news as more of a fuel for the currency strength. So in other words, or the currency pair. So in other words, for example, if your dollar is going up, expect Tuesday to be that fuel to push that currency even further, right? Typically in speaking or any type of speech or any type of testimony or testifying, it's more typically a fuel versus a reversal pivot, okay? I hope that makes sense. But that's not guaranteed on anything. It's not my predicting on what I expect is going to happen. It's more than what typically does happen in my years of experience, just to share with you guys what to look for when that happens. And other than that, that's all we got for the rest of the New York session. Then we're going to go into more of a London session. And in London session, we just got the Reserve Bank of Australia kind of low speaks, which is that governor is going to follow up from his statement or what has happened with the Bank of Australia. Okay, and that's about it. Then we're going to go into London session for Wednesday. In London session, we really don't have anything other than the U.S. Central Bank speaks. So expect the normal volatility. And not to say there's not going to be any volatility, it's just more going to be about expecting the normal volatility, average trading range pair, okay? On Wednesday, going into New York session, we are going to have some serious volatility, right? At 8:15, you're going to have ADP, non-farm employment change. This is going to be a preview of what we could expect to see from non-farm payroll. This is typically the first Friday for the week of March, even though last week was technically Friday, but it was kind of a mixture between February and March in the first week. So this is technically the official financial first week of the month for March. So that's why this Friday would be the non-farm payroll. So this event would be more of a preview. You can expect some volatility, not like non-farm payroll, but you can expect some volatility. The main volatility is really going to be expected right here in the Bank of Canada, okay? Bank of Canada, get this, it's already at 4.5% interest rate. Guess what? They're expecting the same at 4.5 interest rate. So the Bank of Canada, what this means is when anytime you see a currency rate that's basically staying the same, we call this in the fundamental analysis world a pause. Okay, and this is a pause. The pause is the stage 2 that happens after stage 1 of the monetary tightening before stage 3, before the monetary easing, which is also known as the pivot, okay? So it looked like Canada is in the stage of the pivot. So they're taking a monetary pause on interest rate. Now, this could be a strength or it could be a weakness, and it all depends on the statement, right? So in this case, we can expect either or. And that's a sad thing because we really don't know what the market is going to do from just understanding the Bank of Canada. However, Canada has been a little bit strong already. This could be more strength or it could be more weakness. We just have to be able to look at the technical to be able to see what's going on. Now, anything can happen. And the other thing is when you have an interest rate pause, is the interest rate pause meeting the expectations of investors based on the inflation? So in other words, if inflation is still high, why is the Bank of Canada, in this example, taking a pause on interest rate? Okay, if inflation is low and they're taking a pause on interest rate, then that's understandable, right? And that would make sense. However, It's not great for the currency, but again, it makes sense for the currency because of the economy in Canada is improving, or inflation rate is coming down. So if inflation rate's still up and the CPI data is still showing that it's still high, this is going to cause some volatility. So it's kind of hard to predict about what's going to happen from the fundamental perspective. But when we get to the charts, we'll see all the technicals, we'll see where the market makers are at from a liquidity standpoint and from a fair value gap perspective to see where, from an order block, is when it's going to make its predicted move. Or could this be more of the opposite currency pair that it could be trading with? For instance, if USD CAD or dollar CAD is moving up, is it really technically because of the CAD, weakness, or is it more about the dollar strength? And vice versa. If the dollar CAD or USD CAD is moving down, is this really more about the CAD strength or more about the dollar weakness? For the simple fact that we have CAD interest rate basically staying the same. Okay, I hope that makes sense. If you're one of our coaching students, you will probably get more understanding of that because we have more in-depth analysis. Not only that, in our live trade room, we actually take it from a day-to-day perspective as we follow this development. But from the beginning of the week, you would have to actually look at the chart every single day. And this would be going against anything regarding CAD, Euro CAD, Pound CAD, CAD, Yen, and that nature. Okay. Moving on to the Asian session, we have China, which we don't follow, so we're not worried about that. And you got Japanese yen, GDP report. I would expect normal volatility from that perspective, and that would be Wednesday. The other thing I wanted to make sure I covered before Wednesday is keep in mind that as a result of this, the CAD news, we also have to be aware of the market maker cycle from a Wednesday perspective. So that means if CAD, let's say for instance, just take dollar CAD for an example, Monday is going up, and then let's say for Tuesday, it starts to go down. And then on Wednesday, I'm gonna make this for Tuesday, make this for Monday because this is kind of a trap day. And then we have a Wednesday. Could this be that reversal, right? Because it's Wednesday. That is what typically will happen. And this is for if the pair was going up and because it was already going up from Monday to Tuesday. Now, vice versa, if Monday is going down and then Tuesday reverses back up, could this be Wednesday to where it starts to go down, right? This is going up, this is going down. Again, we would have to look at Monday and Tuesday, right? Monday and Tuesday before we see what's going on Wednesday. We also have our artificial intelligence that has a PhD documented accuracy of 86% that really gives us a preview of what's going to happen in the market within the next 24 to 48 hours. As part of our coaching students, we do have access to that very expensive and very accurate software data analysis that a lot of retail traders do not have access to. If you're looking for becoming an access to that as a coaching student, that does become part of your coaching plan, which is a great opportunity to get access to that report. And that helps us trade successfully. So that is what we're going to be looking for on Wednesday, and also for Wednesday, a reversal day. Okay. So moving on to Thursday, for again, nothing on London session. We got New York session coming in. Now, this is one of the things that I usually share with my coaching students. So on Thursday, this is the eve of non-farm payroll, right? Non-farm payroll is Wednesday. And on the eve of non-farm payroll, all USD dollar crosses, equities, and gold, and in this particular case as well, BTC, what we typically will see, which is not really a good day to trade, to be honest with you. Anything you trade from Wednesday to Thursday, it's good. But anything on Thursday is not when you want to really get into a trade. And the reason why is because it mostly ranges on Thursday, because it's getting ready for the big news release on Friday. So what the market makers typically like to do is they like to go ahead and accumulate on Thursday, but make their move on Monday, Tuesday, and Wednesday. Again, this is only during the week of non-farm payroll, not a typical week-to-week particular case of scenario. But on the non-farm payroll, because of this fact, you can expect low volatility or ranges on a Thursday for the setup on Friday for the market maker to make their move out of the range. Now, sometimes you may see a flag that might go into something like this. Sometimes you may see a triangle, which most retail traders see triangles go into like that. Or you may see a bear flag that goes into something like this. Either way, this is all variations of what we call ranges. Not going any really direction, not any clear direction. And anytime you see something like this typically gets showed up on Thursday on the eve of non-farm payroll. Okay? So that's why you don't see any major news on the dollar crosses. Okay? So in London session, we do have a big news during this week for non-farm payroll. And this is going to be a big showstopper for one of the biggest currency of the 2023, as due to the fact of what happened last year with Japanese yen, when Japanese yen did not, Japan did not raise any of their interest rate at all at any of their meetings last year. They kept interest rate low in the negative, as you can see right here, all year long for 2022, which basically decreased the currency strength for the Japanese index. And that's why we saw the craziness of all the pairs that went against Japanese yen that shot up because of how weak the Japanese index currency was, and because of the, not to say because of the monetary easing only, because it is a monetary easing when you basically decrease interest rate, but for the simple fact, this is my opinion, we have a inefficient and ineffective, governor of the central bank that I think he was just really doesn't know what the hell he was doing in terms of monetary easing and keeping interest rate at a negative interest rate. It's not really great for the economy. That really hurt the Japanese economy from a GDP perspective, the inflation, and the basically the currency, right? Unemployment and things like that. Businesses and the industries are just, when every time you have your currency at a negative rate so long, it does not really help the economy at all, and it can put your economy in a very sticky situation like we had in the USD, where we had for 2020, 2021, where the Fed had decreased interest rate, and what happened? We ended up going into an inflationary state, right? Because everything was so affordable, everything was so low, and they were just pumping money into the economy, which is what Japan was basically doing. And that just caused us to get into a more of an inflationary state of 9.1% in the US last year on June when we peaked. Now we're around the 6.4% range, and it's still not going down to 2.0, which is the Fed's target to get the interest rate for the United States economy down to 2%. And we're still at a slow, snail pace of 6.4% at this point. And that's why the Fed has been increasing interest rate, and we've been on this monetary tightening. So this is going to be a very key pivot point for Japan. Is this going to be Japan's first interest rate decision since we've seen since 2020? And if that's the case, what do you think is going to happen to the Japanese index or the Japanese currency? Exactly. We would expect to see an enormous jump in the spike of the Japanese index, therefore strengthening the Japanese currency. And that is going to have a significant impact on all of the Japanese yen crosses. CAD yen, Swiss yen, dollar yen, euro yen, pound yen. And all of those should start to see a significant fall. If we do not see any type of currency interest rate, again, this is going to put Japanese index on another beginning of the quarter dire straight for a weaker currency again, and therefore you probably expect to see a lot of spike. Not maybe to the historical record again, because this is only the first quarter of the 2023. This is not an ongoing, but this could be the continuation saga from last year. Now, having said all of that, this is very, very important for those who may not be aware. As our coaching students have, we keep up to date on our fundamental analysis. We do have a new Japanese central bank governor. Yes. So they voted that already, and that's why we saw the volatility last month. One day when they had the vote, they have a new governance in the central banks for the Japanese yen. So that looked like it was positive. We don't know what this new governor, his name is Ueda, Governor Ueda for the Japanese currency. So hopefully he's a little bit more competent, if you will, in knowing what the hell is going on and how to regulate the currency of the country. And hopefully he does well. And if he's smart enough, I think he would raise interest rate. So we'll see. But as you can see right now, the projected is to stay the same. That could be a concern, as right now it's at projecting to be another negative 10%. Now, I'm not sure how they come up with this projecting. I'm not sure if they're thinking this is because this is more of a what has happened in the past, and therefore there's a low probability that they will raise the interest rate. We don't have a tool to figure out what the survey is going to be like we do with the Feds. We do have the Chicago Mercantile Exchange, would give us a lot of the other big players and the banks kind of opinion, and give it a little bit of a survey of what's going to be priced into the USD or the dollar index interest rate. But we don't have a lot of preview of what's going to happen with the Japanese yen, other than what Forest Factory and a lot of the other fundamental news calendar are projecting. Now, if this becomes the same, I don't know what that really going to be, because that might have an initial shock, as in again, and therefore anything with Japanese yen, it's just going to shoot up. But again, it all comes down to the follow-up of what the governor's Ueda says afterwards. Is he going to say, yes, this is only a negative 10 because of blah, 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 but I can tell you we are looking at projecting to raise interest rate to 1%. And therefore that might just basically initial jump, and then a follow-through will be the fade. We really don't know. Kind of hard to tell. I don't have a crystal ball. I don't think anybody has a crystal ball, but we will see, and that will be on Thursday. Okay, so we're going to look at the technicals, and we'll see what most likely could happen and what could we expect. And that would be on Thursday night at, typically it says tentative, but I can say this typically happen between 8 p.m. to about 9 p.m. Eastern time. Okay, Eastern time. That's when we'll start to see a spike, something in the yen. So if you're in yen pairs, you may want to start to either tighten up your stop loss or get ready to exit. If you're not in any yen crosses, you may not want to get into any yen trades on Thursday. Okay, we don't trade the news, we trade the aftermath. Okay, we don't need to get trapped up in all of the volatility, because it's unexpected and it become irrational, and it can become erratic. So it's very hard to predict about what the market makers are going to do, especially if they get into some type of manual intervention to where they start to do something with the currency. And we don't want to get caught up in that. It's not necessary. Okay, Friday, ding, 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 big day, non-farm payroll week. Okay, starting with the Asian session, we have GDP, right? For Asia, that we expect some volatility for the pound. And then, but you know, even though we have GDP, it could be just a short move and then we'll be back in the range, okay? Or a short drop and then we'll be back in the range. So expect to see something like that for the simple fact, like pound USD or pound CAD, just the simple fact that we got non-farm payroll or employment report, major employment report for two currencies this month, and that would be for USD and for CAD. Okay, and that's going to have a major impact for us as our coaching students. We basically do not trade the news; we trade the aftermath. So after 8:30, after that news is released, so we'll get into the market at 9:30 or even 10 a.m. Eastern time, because by that time, when you have the volatility spike or down and you got a double whipsaw, it kind of creates the high of the day, it creates the low of the day, and it creates the 50% equilibrium of that move. And then what we do is we wait for what the market is going to do. If the market believes that it's overpriced to the high of the day, then the market will go down. If the market is overpriced from the non-farm payroll today, then the pair will start to move up. No one probably teaching you guys that. Come to our coaching class, sign up for our coaching students, and we'll show you how to trade that. Okay, that is for the week. So again, hope you guys mark that in your calendar. So just to kind of recap, Friday, Canada and USD non-farm payroll. Thursday will be Japanese yen. And then on Wednesday, we have Canada central bank's decision. And then on Tuesday, we have basically nothing other than a normal ebb and flow. But on Monday, we do have our Australia. Okay, so that is the biggest one. And then you can add Swiss francs doing London, but nothing as a showstopper other than just more volatility for the Swiss franc currency. And that's it for the week. That's going to be a major mover for what's going on. Okay, so let's go on to the charts. Let's start with the dollar. Let me go ahead and switch charts. Let me know if you guys can see my screen, so I'm making sure I'm on the right screen. You guys should see the dollar index on TradingView for my markup. You can type one in the chat to let me know you guys are seeing the same thing I'm seeing and you're not seeing something else. All right, awesome. Appreciate it. Thank you. Okay, guys, so this is the dollar index. And let's take a look at it, because we as traders, just our job is to predict where the market is going to go, right? As a trader becomes profitable, where our job is to predict the fluctuation changes in the currency or the currency pair, and to be able to move with the market and anticipating where that market is moving, so that we can make an informed decision to either buy or sell, right? Plain and simple. Sounds simple enough. And if it was that simple, everyone would be doing it, right? So why is that the case? Well, we already know it's all come down to human emotions and psychology. Just no other way to say it, but that's really what it is. Okay, so this is my analysis from last week. I haven't moved it, but I am going to do it now. Let me just move this out the way, because I had it to where it was looking like it was going to hover around this area and take a drop. Take a look at what I just did and take a drop. Hold that thought. I'm going to delete that, and now I'm going to show you what's going on. Okay, let me back up here. This was the peak of the dollar index back in September last year, so September 27th, September 28th. And then we had this trend to where you see this blue line right here. I'm going to make this yellow. So you'll see this line here. When the price went up, came down, price came up, came down, price came up again, came down, came up, and came down. And then we finally had this break of structure right there, right? Where we had this low, create a higher high, higher low, lower high, lower low, lower high, lower low. But this right here, when you see something like this, this is more of a trend line liquidity, but more importantly, this is also stand for kind of from an ICT smart money concept. It's called SMS, and what that is called a shift or shifting market structure. Okay, that's basically what we're seeing there. We're seeing a shifting market structure of when you have pairs or price coming up and it's kind of having a hard time taking out the previous high, basically exceeding the previous high, creating, in this instance, a lower low or a lower high. And you can see right here, this was kind of an equal high, came back, it did not even come up to equal high, came up to a lower high. And this is when you have an SMS, or also known as the trend liquidity. Okay, so now we have that. We have the break of structure here. We had a BMS and a change of character, and then we came all the way down and we peaked here in January 23rd. That was on that. You see February 3rd here. Yep, February 3rd, where we had the non-farm payroll, and this is when we had that shift. We had that shift on that non-farm payroll on that Friday. Boom, and that's when it shot up. Right. So we've been on a risk-off situation in the market. Anytime we have the dollar getting strong, that means we have equities and the weaker part kind of going down in a bear market. This has become a risk-off scenario. Okay. So here we came into a high probability. We came in, we meet this high right here. And now we had a very liquidity spot right here. This is on a daily chart. So I want you to know that each one of these candlesticks is a daily. So we came in here, we picked it this high, and then boom, it shot down. Non-farm payroll, February 3rd, last month, boom, shot this back up and basically came up to this particular order block is what we call it, right? There was some imbalances here that all got eaten up. And then this is Friday, Thursday, Wednesday, Tuesday, Monday. Where did we go? Basically nowhere, right? We didn't even come back and beat this or take out this previous high from Monday. And basically for the whole week, we've been kind of going sideways, all right? So based on what I'm seeing here, it looks like from what I'm seeing, we have more downside pressure momentum, but we have to understand we got two things coming up, and I just talked about one of them, which is non-farm payroll for this Friday. So non-farm payroll for this Friday, based on what we're seeing from previous report, and keeping the fact that we are still in a high inflationary rate in the US, this is the dollar index, we should start to see dollar strength. However, if we start to see dollar strength now, it'll be too easy for you as a Forex trader to go in and just start long in the dollar, therefore shorten euro dollar, pound dollar, or dollar. It'll just be too freaking easy. Too freaking easy for you. The market is not made to be easy for you. The market is made to be manipulative, to thinking you one thing, to induce you to do one thing, to take you to do something, to take it somewhere else and liquidate you for you to lose. That's how the market wins, okay? So how in the hell would you trade that then? What do we do, right? Because this market's been going sideways. Well, typically, from my experience, Friday is the gotcha, right? That's the when they pull the rug from underneath you. So Friday, based on previous report, employment's been pretty strong. So if employment comes pretty strong this Friday, that would typically strengthen the dollar. We've been kind of on a downward trend here. You can see slightly. We've been having a lower high this previous Friday's been a lower high, and we ended up here closing. We have a volume profile point of control sitting right there, which tells me, since we've been kind of a lower high, lower high, lower high, we probably will be coming a little lower up until Friday. Okay. So that initial markup that I had, remember, let me see if I can go back, because it's going back and putting in everything I had on there. Okay. Oops. Let me get that out the way. Look what I had coming lower. So with that being said, that's exactly what I'm expecting. We have this structure here. Well, we got this breakup structure here, which I don't think we are going to break it. I think we are going to come down, maybe even poke it to the previous weekly low, and then non-farm payroll, take it back up. So this is what I'm looking for. To this area of order block right here. And that's what I am expecting for next week, week after, next month, or end of the month. This is on a daily chart, so I have to be able to kind of look at what the market is doing and what I project the market to do next month, right? Now, why would I say that the dollar will be going up? That means dollar will getting stronger. Well, that's the second point I wanted to mention now. What I did not cover is the upcoming FOMC rate decision on March 22nd of this month. So on March 22nd, the Fed are expected to raise interest rate another 25 basis points. That right there, just on that alone, will be enough to strengthen the dollar and then take away any type of promise, irrational bullish run from the equities market back down, right? So in other words, it can cause that recession fear to come back in and basically be a showstopper to that promising bullish run that we've been having this kind of week, due to the simple fact that our dollar has been kind of weak. So I'm expecting a little bit more dollar bearishness Monday, Tuesday, Wednesday, Thursday. So that means 4 days we could come down. We could come a little bit lower. I wouldn't be surprised, but this is where I'm having it at the previous weekly low of 103. Could it come lower? It could. I doubt if it comes this far, but I could see a little bit downward move, kind of typically coming down, and then Friday, boom, shot up. Okay. So in other words, it'll look more like this. And then exceed this right here or come back to the equal high for Friday. Okay. Come like this. And then the week after for next week, go a little bit higher, meet to this order block here, come back and retest this, then go up to our equilibrium the week after, come back down, March 22nd, come up all the way up here for the simple fact that we have a big fair value gap sitting right there, and that's an imbalance. And I have a little indicator that tells us right here that this imbalance has been mitigated by 0%, meaning this whole gap has not been mitigated whatsoever. Okay, so that's what I'm projecting. This, if this exceed 1.03417 on the dollar, that means something else is going on, and I will be taking a look at this each day as it's developed. And if the market goes down on non-farm payroll, then there must be a shift in the market that's unexpected or unbeknownst to the public, even myself, to say that the economy of the employment is actually doing worse than what we've seen in the last two reports of employment data or any type of employment change. ADP report employment change on Wednesday will give us a pretty good, strong preview of what's going to happen on Friday for non-farm payroll. But if unemployment gets higher, less jobs getting created, which I do not see that at this point from all of the data points, from all of the reports that we've seen and we've been following, I don't see any type of weakness in the employment change for the U.S. other than it's a very strong employment change. Even job growth has increased, and our job wage has also increased, even though inflation is pretty high. Those two numbers just does not make sense for the dollar to continue to be weaker, knowing that this means the Feds needs to step in and do more interest rates increase, okay? Also, from just a technical standpoint, just to kind of give you guys an overview, just from a structure standpoint, right after we had this reversal swing, higher highs, higher lows, higher highs, I would expect to see a higher low. And that will kind of give us a trend line trajectory going all the way up, okay? We definitely got a big equilibrium. That is something that the market, from a theory standpoint, the market is an equilibrium market. From this swing high to swing low, I would expect this market to at least come up to 50%, which is in our 50%. This is right now in our discount zone. We would need to see this come up, especially if you got a big value gap here with a big, nice order block and liquidity point. This right here is where I'm calling it now. This is where I'm projecting the dollar to go over in the next 3 more months. There is going to be more interest rate changes and increase. In fact, the Feds are even talking about possibly needing to do a 50% increase, with even a couple of the members boards even supporting the fact that the Fed may need to go at 50 basis points. But, however, there are on all agreement and all alignment that interest rate will need to go up and need to stay up longer, okay? That means basically no pause, no pivot this year. It might be a pause in the third or fourth quarter in terms of no more interest rate changes, but it won't be a pivot to where it starts to be a monetary easing for the rest of the 2023 and the reports and what Powell have seen, okay, and what they're talking about. That is a lot, but it's something to be able to understand from a fundamental standpoint and what we're seeing from a technical standpoint and seeing how that may play out fundamentally, okay? I hope that was helpful. Really understanding the narrative around the fundamentals, the economy, the state of the economy, and specifically related to the index of the dollar and how we're following it from a technical standpoint. Okay, so let's go to the inverse correlated market. I'm going to go to the equities side of the market, which is S&P 500. I'm going to move this right away. And here's what you see from a dollar standpoint. Okay, so this is what I initially had the last time I did the analysis. I was hoping to see the break on the S&P 500 come further down. Of course, that was going to be dependent on if the dollar was going to get stronger. However, that was not the case on Friday. On Thursday, Wednesday and Thursday, we kind of reached that previous low that was back here in January 23rd. And we basically hit that same level at around 39.40. And then just from there, we just shot up, okay? So from a market structure standpoint, This is what we're seeing overview. And this is kind of a macro, higher highs, higher lows, higher highs. And then we saw this come down. And then we saw this reversal come back up. And we came another higher highs, higher lows. And then we had a little small shift coming down, but down, it looks like we're coming back up. Now, so what does this mean from an overall perspective? Okay, so this is the overall S&P 500. This is the high, a historical high of the market that was established back in December 31st of 2021. And then since then, we have not been high. We've been in a bear market, and we had a short rally all the way up to about February 3rd. And then after that non-farm payroll report, boom, it's just been in a bear market, right? So let's take this back down. So this was that non-farm payroll decision. And since then, that non-farm payroll of February, we've been just going down, down, and down. But last 2 days, we've been getting this push, and that's because of the dollar weakness. Well, we are leading up to non-farm payroll. Well, there's a couple of things that I wanted to point out. We did have an imbalance that was here, and we're getting ready to mitigate that, right? There is no imbalance here, and there's no imbalance here. So there is no really need from a price perspective, technically, for price to come all the way up here again, right? And with that being said, leading up to non-farm payroll, expecting a strong employment report that I just talked about for the dollar to possibly, therefore, strengthen the dollar, that means I would be looking for this to be weakened on that non-farm payroll. So this would be more inversely correlated to the dollar. Therefore, I would be expecting, yes, a little bit more bullishness, right? We may see a little bit of a dip, possibly on Monday, but just looking to go up. And I would say it's looking to do something like this, or even come close to here, but I don't see it taking at that high, taking that high, or even coming close to taking that high. But I am looking for it to come up somewhere around this area and then tank down to the equilibrium price, right? And then from there, just start to tank down all the way down. And this would be my prediction on what I'm expecting to see for the remainder of March. So the non-farm payroll is going to hope that report comes out very strong. It's going to strengthen the dollar, therefore weaken the economy, therefore weakening any type of growth in the stock's earnings for some of these companies. A lot of companies have reported some very strong earnings, and some of them have not, right? So it's been kind of a mixed red-green market. But in the next couple of months, this is signaling that we most likely, if we see the drop, we'll probably start to see more of a bearish or red market again in the equity side. And therefore, I'm expecting, unless we're able to take out these highs, right? We need to come out and take it way all the way up to 41.95. I'm not convinced of any bullish rally until we get above 41.95. We don't get above 41.95. I don't care if it comes all the way here. If it doesn't break, I'm not convinced to say, hey, the market is recovering. We're no longer in a bullish run. We're no longer in a bear market. We should start to see growth in the equities market. S&P 500 is going to come back to equals highs. We're out of our inflationary issue. Unemployment is strong. GDP growth is coming, and economy is going to be going back strong again. Does any of that making sense right now? High employment, strong employment data, high inflationary rate with with more increase coming? No, it does not make any sense from a fundamentals perspective. So on March 22nd, we're going to start to see something like this. Okay, is the Fed rate every month or every quarter? That's a very good question. Let me go ahead and point this to your tool that we use. I'm gonna switch screen real quick. This is the Chicago Mercantile Exchange Group tool. Anybody can go into cmegroup.com and pull up this tool. Our interest rate decision for the year is March 22nd, May 3rd, which is every other month, right? March 22nd, May 3rd. And then this right here, May, June is basically month to month here, right? But this is kind of like the second quarter, first quarter here. This is the first quarter. It's like 2 rate decisions per quarter. So this is the March, kind of going into the first quarter and closing out the first quarter. And then for the second quarter, we have May, and then we have June 14th. And then for third quarter, we have July and September. And then in the fourth quarter, we have November 1st and December 13th. So it's basically 2 rate decisions per quarter. Hope that makes sense, Mike, and I hope that answers your question. Very good question. I appreciate that. Okay, going back to our technical charts, that's what I'm seeing from an equity standpoint. So I am expecting a little bit of equity increase. That means more bearishness into the dollar, and therefore I'm not bullish on a rally for this quarter or even the next quarter. In fact, I'm expecting the market to get a little bit worse. Okay, now don't go around and say, hey, Leonard from FS Prosperity is saying that, you know, it's going to be doom and gloom and therefore blah, blah, blah. And he is not thinking it's going to be a rally. We're going to get into a recession. Do not go around and say that, because that's not what I'm saying. Even though this is being recorded, I've already said the disclaimer. So I'm not predicting anything, but other than what I'm seeing and what my experiences from an economic standpoint and the data point that I'm actually seeing, this is my idea and thesis and my prediction on what I'm seeing, and I can be completely off, okay? Or I can be 100% dead on. Either way, I'm going to be trading this and watching for each development per day as the market develops, okay? So let's go to the other inverse correlated market, would be gold. So I'm moving up to gold now. So this is gold. This also follows the bond yield. And yep, it kind of follows the indices market as well. So you can see real quick, let me go ahead and go to the weekly. I'm gonna pull this up and I want you to see this from a higher time perspective, okay? So you can see where we had our order block that was there from the peak of the market that was created back in April, right? This was crazy, July 20th, that was insane. Then we had basically March 7th when Putin, Russia invaded Ukraine, right? And it created this nice order block, and then we came back down. So let me go ahead and paint that order block for you so you can see what I'm talking about. So that's the order block of, you know, the peak here. We had a swing high, and then it came back all the way down. And then we came all the way here, and as you can see, look how quick, how it liquidated that location, and then boom, swing all the way back down, okay? So let me take this back down to the daily time frame so you can take a look at this from a daily perspective fractal. When we came back up, we had that order block. That's what I'm saying. And I called out, and you guys who've been watching it, you know I called out we should be going short, okay? And we did. We went short, and we went to this particular area right here, right there, where all this retail was holding support, and we came back up, okay? So let me now zoom in a little bit closer to see now with the dollar weakness and what we have for the last couple of days, could gold go a little bit further? And if so, why? Well, fundamentally, I've already explained that we are expecting the dollar to be a little bit more weak, leading up to possible non-farm payroll, right? Now, that doesn't mean anything. The dollar could be stronger Monday, Tuesday, and Wednesday, and do completely opposite of what I'm saying. And then on non-farm payroll, then make it even weaker, all right? Then go make it weak. Typically, I think what I'm saying in the former is probably more accurate with a higher probability. I do think the dollar is going to continue to be weak for Monday, Tuesday, and Wednesday, kind of range on Thursday, leading up to non-farm payroll on Friday. If that's the case, especially what I'm seeing here with this reversal swing here, we had this little swing, and for 3 days, this is on the daily chart, had a hard time breaking that 1804, 1809 price range, okay? So with that being said, I do see, as our traders see it, we do have imbalance sitting right there, right? Which is very, very nicely. And then we have an order block sitting right here with that imbalance. Okay, nice order block sitting right here. And I break it down in 3 because that's kind of the midpoint, the top of it, and the bottom point with this imbalance, okay? So what am I expecting to see? Well, I'm expecting the same thing of what I was saying with the indices. I am expecting, yep, more bullish run. And I'm expecting it to go about 1885, and we may come down from there, okay? Now, that doesn't mean it can come down from there on Friday, but since it's Monday, we could see a little bit of pullback just to kind of liquidate some of the traders who went long, kind of pull back a little bit, hit up here, mitigate this fair value gap, touch the bottom of this order block, come Friday, and then boom, we'll come back down. Okay. Bold, but that's what I'm seeing. Swing high, swing low, swing high, and then swing low. Higher highs, higher lows, higher highs, higher lows, and this all is predicated based on the dollar strength coming in. This right here will be a dollar weakness. This move right here will be because of the dollar strength. Okay. This is what I'm seeing on gold. This is what I'll be watching each day as it develops to see if price get reversed here or price get reversed here. If it's Friday or Thursday, let's say this is Thursday and price is here, then I would expect it price to go from there. That is about as far as we're going to go. And we may not go ahead and fill that fair value gap, but I'm thinking, well, I can tell you this, we're getting pretty close. This is my target of why I think market makers are taking this price up with the dollar weakness to go ahead and mitigate this area real quick that they push price down, that caused them to go into drawdown, liquidate that real quick, thinking traders are getting induced to go long, to take out this high, and then boom, pull the rug right underneath them, okay? That is the dollar. Let's go to BTC so you can see what's going on from a Bitcoin perspective. This was my markup from last week. And as you can see, if I'm just going to move this right over, this is where I'm at right now. Okay. I'm going to move this out, take this off, and we're back now to around 22. And I was saying that we probably won't see price go below 20, which I'm still holding on to say I don't see price going below the 20 value. Okay. Now, having said that, this is what I'm still projecting. I am projecting a little bit more weakness in BTC. We may have a little bit of pullback, but I'm projecting that we go around 21, right? So we may see a little bit of bullishness here on Monday and Tuesday. We may come back up, and we may stay in this range, but I don't see us dropping below 21. If we do, this is about the lowest I can see us go to, about 20 grand, okay, on Bitcoin. And then we're coming back up, okay? This is what I'm projecting on Bitcoin. We're in this range between 25, I think that's what we came up to. We came up to about 25.2 to take out and liquidate and take out this liquidity pool that was sitting right there and took out, and the whales just kind of just pumped priced and dropped it. I mean, dropped and not pumped price. After they pumped it here, took out this high, faked a lot of traders who were going long, and then just dumped Bitcoin back down. And it's looking like it's going down now. We're in a little bit of a downtrend here. I think it's going to pump up a little bit, and then they're going to drop it again with non-farm payroll. and think we're going to see 21.3, possibly down to 20 grand. However, I think we are going to stay within this range, okay? I do not foresee Bitcoin ever going back down below 19. I think this price of 15, 15.5, 15, I think this was the bottom of it, okay? This was that FTX situation that dropped Bitcoin down, where they had that fallout, and FTX coin basically had scammed everyone, and I think that was it, and I think we came out of that. I think this was more of an anomaly, but this whole piece right here, I think this is the Bitcoin bottom to the higher time frame of what we're going to be seeing with Bitcoin coming back up, with the Bitcoin having. Once we break out of this 25.2, guys, which I'm expecting we'll break out of 25.2 somewhere in the second quarter, calling it April, May. I'm looking for Bitcoin to drop out of 25.2 and start heading towards the 32, 35 mark. In the fourth quarter, third quarter, I'm looking for Bitcoin to come up to around 40, 48,000, 50,000. So around 30, third quarter, fourth quarter, right here. By year end, I think we're going to be close to the $50,000 range by year end. Yeah, this is when we break out of this 25.2 towards the end of the second quarter. I'm projecting maybe it could happen as much as even early third quarters, July-ish, August. But by December, if we break out of this, there can be a nice bull rally as we get into the Bitcoin halving for 2024. And that's going to be huge, okay? But I think this is the Bitcoin bottom, and I think it's good to see that. We're going to be in this little range for a little bit, going back to the daily. But other than that, I don't foresee Bitcoin going back below 19,000. Could we see it again? Sure, but I don't think we'll go below that. And then we're going to be back up here in this range. But I think we're going to be, to be honest with you, if we don't break below 21,000 or even close to 20,000, I think we're going to be staying in this range for a little bit longer before we break out. Okay, that's Bitcoin. Let's go to the forex pairs now, one by one, starting with euro dollar. Okay, so we already know dollar weakness beginning of the year, beginning of the week. So that means, yeah, a little bit more of euro strength. Yep, euro dollar strength. So we are going to probably, we got this lower low, lower high, lower low. I think we're going to come close to come up to this imbalance here, right? That's my target in terms of what I believe euro dollar is probably shooting for. However, if we don't take out this 1.07, which I think we will, I think we're going to be more like come up here and then we'll come back down. Okay. If we take out 1.07, right now we're about 1.06, but if we take out 1.07, then we're coming up here to about 1.08, 1.09. It could be a Monday, Tuesday, Wednesday, Thursday deal, and then Friday take it down. Okay. From here to here, we're talking about 199 pips. This pair moves about 89 pips. So go figure. You guys can see that in about 2 to 3 days, we can easily reach up there. 89 pips in a daily range. So that's easily doable. If it was 1,000 pip, I'll be like, no way. But I don't see us going back to take out this 1.10, 1.108, where this fair value gap is at. I can see that coming up to mitigate that real quick, and then we're going to slam down on non-farm payroll back to this low right here. Okay, and then after that, pull back a little bit, and then we'll come back down. You see this equilibrium? Yep, I think we're going to come and see that one more time, which is going to come close to parity. I don't think we're going to break down below this parity, but I think we're definitely going to come down to the equilibrium one more time, close to that parity before we go up, and we're done. Okay, I mean done as in euro dollar being that low, so that we can go back to the highs of euro dollar that was once enjoyed way up here, right? Right now, we're down here. We came all the way down to parity back in July of July last year, below parity. I don't think we're going to go below parity. We'll come back and probably touch that parity one more time, close that about 1.02, the equilibrium of the swing low, swing high. Kiss this point one more time with the dollar strength, pushing it down, and then going back up. But for this week, I see it going back up, lower low. So from a macro perspective, this is a high, this is lower high. Then we're going to see a lower low, lower high, and then we're going to come back down. Okay, so that's your dollar. Excuse me. So a little bit of bullishness before bearishness. Okay, moving on to pound dollar. Here we go. Euro dollar, pound dollar, both correlated. I'm seeing the same thing. This is what I'm projecting. We'll move this out of the way. I do expect to see, you can see this is kind of like doing something like that. It's in a little bit of a range here. So that means it's kind of bullish here, but I'm expecting it to come close to maybe equal high. If not, it'll come close to about maybe about 1.22, and then we'll come back down here. For non-payroll, non-farm payroll, probably take it down here to about where we're at, or even close to the low, the weekly low of 1.19. Pull back a little bit, but I think we are going to see this one more time. Okay. From an equilibrium standpoint, I don't think we're going to see that low. Let me take it from here. That is more probability. I'm gonna go put a price label here. 1.15. That's for the equilibrium, is where I'm thinking pound, euro pound could go down to. But for now, I am expecting a little bit more bullishness from pound dollar. If it breaks to 1.21, then we'll come up to about 1.22. If we don't break that 1.21 by Friday, guess what? Then it's going to be more like that. Okay. But as of right now, I think we're going to come close to 1.219 or even 1.22. Either way, I'm expecting a little bit more bullishness from pound dollar due to the dollar weakness at the beginning of the week, and then come back and slam this bad boy down from the expected dollar strength coming in. Okay, odd dollar. So we got odd dollar coming in. I think with the expected bank rate decision, I think the odd dollar is going to do more like that. Dollar weakness, pound dollar currency, come back to this point of control of about 0.69, and that be at the bottom of this order block, and boom, slam it back down. Okay, so a little bit more bullishness on pound dollar. I think we came in, look at this low here, right? So we had 1, 2, 3, 4, 5 areas, 5 times our dollar had came in and poked this 0.69, 0.67, and did not take out the previous low of January 3rd. That was the last time we had this low, and it looked like we're bouncing back up. We do have a small imbalance here, but I like this point of control, which is at the bottom of this order block area right here. So this previously weekly high of 0.692, and then we're going to come down. Okay, so looking at Monday, Tuesday, and Wednesday, look for that bullishness, odd dollar, and that odd dollar could be peaking up. That'll shoot up with the dollar is expected increased interest rate that we're seeing or expecting from a projected standpoint for odd currency. And then we're going to see this come back down. All right, moving on to the next one, NCD dollar. NCD dollar, it follows suits with typically with odd dollar. We had, again, hard time breaking this low. You can see it right here, 0.61, 0.615. And it looked like it came up, came back down, and it looked like it wants to come back up, which I would agree. And I'm expecting a little bit more bullishness from NCD dollar. I would like to see it come as far as this. I don't know if it'll come all the way up to 6.4 before we come back down. From a pips perspective, that's 236 pips. Not with a lot of news that I'm expecting. There's no NCD news. So we may come about that high, which is about 0.633. So it'll come up lower lows, lower highs, lower low, lower high, and then we're going to take this back down to equilibrium. Okay, that's what I'm seeing right there. This equilibrium from the swing low, swing high. So if I was to put my premium discount, this is that premium discount zone area. I think we're going to come this low eventually with NCD dollar before we even come up, and that would be with the Fed pivot, right? Third, fourth quarter, right? But I think we're going to see a little bit of bullishness for this week, and then boom, hit this down, more rate decision, dollar strength, and just continue to pound NCD dollar. Okay, dollar CAD. With the dollar, with the CAD expected weak strength, I am expecting with the dollar weakness, really. The dollar weakness, I am expecting a little bit more bullishness with dollar CAD. Let me put this out right here. We got CAD rate decision, and that could strengthen CAD as well as the non-farm payroll with the dollar weakness. We could look to exceed that. So dollar CAD, we could look to exceed that, possibly up to this level here, or even it can even go this high. But I am expecting to come up somewhere in this area, right? 0.786, 686, and then boom, let's come all the way back down. So that could be, it could be ranging, but eventually I'm expecting it to come back down. So we're in this little range here. Since the beginning of the week, we've been kind of bullish. So I am expecting a little bit more bullishness on dollar CAD. I'm sorry. All right, let me take that back. Not that way, the other way. CAD strength, I would be expecting this to fall, right? Sorry about that. Dollar CAD, dollar weakness, CAD strength. Yes, let's take this all the way back down to here. Well, we can see this come all the way back down to this low of about 1.32. Okay, 1.32. Could this come even lower? It could, but I would say for now, from where it's at, we could look at about 330 pip on dollar CAD. I wouldn't be surprised to see the dollar CAD even come at this far for this week. That's a big move. That's about 526 pips. I don't think it's going to come that low. I think I'm looking at about a low right here of about 1.32. We did retest that peak on Friday and had a hard time dollar trying to push up past 1.36, 1.366. So we had a hard time pushing that, and now it's looking like the dollar CAD is going to be making a strength. I can see it come all the way down to about this one. We got we got two big great decisions, right? We got the CAD and we got the CAD employment report. Now, it could come close to, for sure, I can see it coming down to 1.34, right? This is about a nice 179 pips. The pair moved about 110, 120 pips. I can see it coming down that low in a couple of days, especially with the rate decision. However, it could even come even lower than that to around this area. And then we're going to be making our way back up. Okay, and this is what CAD strength puts it all the way back down with the dollar weakness, and then non-farm payroll or after we're going to be seeing coming us back up. Okay, dollar CAD. Sorry about that mix up. Dollar Swiss francs. Well, dollar weakness in the beginning. I can expect. Yep. This right here. Come back down. All right. So we could come back about low to about 9.233. Come back to this nice support area where a lot of retail traded at the previous weekly low. I like that number. There's a nice order block right here. There's a couple of fair value gaps here. Other than that, that's about as low as I can see dollar Swiss francs go to, about 0.922, if that, or about anywhere between 0.926 or 0.922. And then after that, dollar strength take up, boom. The reason why I'm thinking dollar is going even higher is for the simple fact we got a nice fair value gap sitting right here, and the equilibrium is right here. This is coming, okay? With this big old gap, that's a big imbalance. Dollar strength, it could come even higher all the way up here. So we might see a small pullback Monday, Tuesday, and Wednesday, even Thursday range, and then boom, shoot up on Friday, okay? Dollar Swiss francs, short-term bearish for the pullback. Lower lows, lower highs, lower lows, lower highs, lower low, boom, shoot up Friday. Okay. Short-term bearish on dollar Swiss francs, and then long-term bullish dollar Swiss francs. Okay, yen, what we're going to be doing, yen. Okay, we expect a little bit of, no, I'm making a lot more. That dollar yen is going to be a concern to tell me what's going to happen with the dollar yens. But I can tell you, we are most likely going to see, obviously, dollar weakness. So we're going to see this come back all the way back down, could come all the way down to this order block area, right? So dollar yen come back down to about 1.32, and then that's it. We're going to go back up. And I can see dollar yen coming up to this equilibrium to about this fair value gap here, way up here. This would be a premium fair value gap. If not, we'll come back to about right there. Short-term bearish on dollar yen. By Friday, we should start to make our way up, and definitely by next week. Okay, so dollar yen, I'm not going to be looking to buy dollar yen at all this week. I'm looking to sell dollar yen. We're having a hard time breaking this up all week. We did not break this high of 1.36. I'm looking for it to drop around 1.323, and then we take it back up. Short-term bearish on dollar yen before we go long. Euro yen. Okay, euro yen, same thing. I'm expecting a little bit of a range. I do expect a little bit of probably bearishness around there, and then we'll go back up. So we had this little peak up here, and it's looking bearish here. I would say a little bit more. It could come as low as 1.42, right? 142, sorry. Could come down to about between 143, 142 on euro yen before we come back up. So on short term, euro yen, be short for this week. We're looking to see it go long next week. Pound yen. Pound yen was a nice little peak up here. I do see a little bit of peak, but then I'm looking for it to drop. Okay, so that was a nice peak up here. When pound yen came all the way up here, go ahead and take that out. That was an imbalance that was fulfilled. Came up here, we got that mitigated, covered that, and now I'm seeing a little bit of more bearishness on pound yen before we come back up. Okay, a little bit more. I don't think it's going to go that high. Yeah, we could. Okay, so a little bit more bearishness. So we got lower lows, lower high. I'm expecting a lower low, and then like back to lower high. So bearishness on pound yen before we come back up. CAD yen, nice. CAD yen strength, yeah, baby. Let's take this down. That's what I'm looking at. I'm looking at CAD yen come all the way down to about. It could come somewhere in this low in this area. Okay, there's a nice order block here. So anywhere between 97.2 to about 97, 96.3. 97.2 to 96.3 in this area before we come back up. I doubt if it comes all the way up here. It'd be nice if it comes all the way up here, but I doubt if it will. So let me go ahead and reset my expectations here to the equilibrium area. Maybe it's about like there. Okay. So that was a nice order block. It came up here, had a hard time breaking this 100.6, 100.3 for the whole week. So I'm expecting it to come back down with the yen strength. Well, we got CAD strength coming in too. So this may be a little range bound. I'll take that back. It may be a little range bound. With CAD strength, yen strength, you know, if we come back like on Monday, so we got the CAD strength, CAD bank rate on Wednesday, right? So think about this. Monday, Tuesday, you think what I'm thinking? Monday, Tuesday, Wednesday, reversal day. Can I get that? Monday, Tuesday, Wednesday, reversal day. So a little short-term bearishness on CAD yen, then we come back up. Okay. Odd yen. Yep, I'm expecting a little bit of bearishness on odd yen, right? So odd yen until Tuesday, and then boom, we're going back up. I don't think we're going back to the equilibrium. A little bit slash past the equilibrium here in this area. This is when I'll be looking to sell. So we may see a little bit of bearishness. But other than that, by the end of the week, I think odd yen is going to be coming back up with the odd strength and euro weakness. So everything is pointing to euro weakness with the expected, with the expected yen, no increase on the currency. Yeah, technically everything is pointing towards looking like we're going to come back up. So same thing with NCD yen. Look at this. NCD yen had a hard time breaking this 185 and 84 level here. We came up right to this equilibrium area and we came down on Thursday and Friday. I think we're going to come back just slightly lower, right? And then we're coming back up. So I want you to think about something real quick too. There is a big fair value gap right there. This fair value gap right there. Right in this area. That's going to need to be mitigated. And I can see NCD yen making its way close to that. And if the yen does not increase interest rate, yep, guys, all yen is going to be coming back up for a little bit. Okay. And then we'll come back down maybe by the end of the month. Okay. A little bit bearishness, and then boom, shooting up. Let's look at Swiss francs. Having a hard time breaking this high. A little bearishness here. Yeah, I think it's going to be a little bit more bearishness here. Unfortunately, a little bit more bearishness. We got a little fair value gap here. I can see that. Little fair value gap. Take out that little low, and then boom, come back up. We could come back to this order block in area right here. To me, it's a very high probability. I don't think we're coming up to this high here. So a little bearishness this week, and then Japanese yen decision. I'm afraid, guys, it look like this is gonna put some pressure on the yen on Thursday, Asian session. They do not raise interest rate. This is coming up, and I can see it coming up to this order block before we come back down. Okay, that's my yen prediction so far from what I'm seeing on the technicals. Okay, let's go to euro odd. Euro odd has been ranging. Look at this nice peak. Right, well, look like a head and shoulder there. But I would say with the expected odd currency strength, yeah, I see that's coming. Okay, so I would say around Tuesday Asian session, guess what? We're going down. Okay, so I can see this. This is where I want to see. I want to see euro odd come all the way down here. Come down here past that equilibrium, then I'll be looking to buy it. But other than that, it's creating a nice, what most people will see, right? Soda, head, soda. It looks that way. I'm not trading it that way. I'm just saying I can see that pattern, but with that odd expected strength, I can see this pushing down. Okay, so I'm bearish on euro odd, pound odd. Ooh, we had a hard time breaking this. That was a nice liquidity grab area right there. I could see that. That was nice. Nice liquidity grab at 1.8 on pound odd. And then pound odd started to break away from that high. So I am seeing more bearishness back to the equilibrium. There we go. Pound odd coming down. And then I can see it break up a little bit higher. This is where I want to see pound odd come down to. By the next quarter, right? It comes in this area, then we're going back up. But as of right now, for the rest of the week, pound odd, I see it coming back down. Euro CAD. Wow, Euro CAD has just been ranging up here. Just after it took out that liquidity, it came back here, it came back down, come back up, but it did not. You see that? It did not take out that previous high. So we have another scenario of that, trendline liquidity. So we got to shift the market structure, right? Shifting market structure here. That means we're coming back down, baby. Okay, so I think we're going to come down and take that high. CAD strength. This could be the catalyst to finally break this low on Euro CAD. Here's the low I'm talking about. Euro CAD has had a hard time breaking its low of 1.42. Came down, touched it, came back up, took out this liquidity, came back down, took this liquidity, but it failed to take out this high. So since we have a SMS, shifting market structure, finally, we may have the catalyst to break that 1.42. And if we break that 1.2, that's right, we're coming all the way down here. This is where we're going to be coming down to, right? To that nice equilibrium area. And then that's even probably high probability area, right? So this might be a nice setup, guys. Nice setup for your CAD finally to come back down to our equilibrium price, right? So this is from this swing low to the swing high, and you take the 50%, that would be on equilibrium, which is right here. And we, with the CAD expected bank rate decision coming up on Wednesday, this is it. Boom. I think this is going to push it down. Yeah. But, you know, keep in mind, it's the same interest rate, but it may be just a strong hawkish comment come out of that. But from a technical standpoint, I don't see it coming up. I see it coming down, right? It's been having a hard time. And that's why I'm saying from a technical standpoint, even though it is the same bank interest rate decision, from a technical standpoint, this move and this recent move here did not take out this high. So when we have something like this, this is an SMS. I guess it's got to be shift in market structure. This tells me we're going to come back down. Now, this may be the catalyst. This may come down with CAD rate decision, and then CAD employment report on Friday. You see what I'm saying? I don't see this breaking up because of this move. Okay. Now, not just one day. Look at 1, 2, 3 days. This is on a daily candlestick. This is each day is a candle. So on March 1st, March 2nd, March 3rd, it's just coming down, right? Having a hard time coming out. So from a technical standpoint, from a higher time frame, I'm bearish. Okay, about pound CAD. You guys tell me. I'm just saying what I'm seeing from the technical standpoint, right? This is what I'm seeing. We took out this liquidity, came this area right here, came back down. We are coming down. This might be the catalyst that takes it down to pass our equilibrium, which is where I'm projecting. Come down, right this area, come right here, and then probably take it down to about this. This is where I like to see it come all the way down to this order block. This order block right here. In this area, this is where I want to take it. I want to buy it. High probability? Yeah, we'll come in there. Okay, so I'm bearish on pound CAD. Move it along. Your NCD. Nice push, NCD. All right. Okay, so we had this nice liquidity grab here, nice pullback there. If this is holding up, and we look like we came here, came back up, we're looking bullish, but I do not think NCD is going to be enough to push it back up, right? I'm still looking for NCD to come back down, and therefore I'm looking for your NCD to do this. Come back to this lows here. Okay, so that was a nice touch on your NCD, fill through this gap, got into the premium zone. This is where you would want to short, and I'm looking for more bearishness on your NCD. Okay, pound NCD. I'm bearish on your NCD, pound NCD. Ooh, just like I wanted to. Look at my L. Here it comes. All right. Yes, I thought we would come to it. It was a nice little move. Nice move coming up. Took out that liquidity, filled in all of this liquidity area, came back down 1, 2, a little bit pushed up. I do not think we're going to come out and take that high of 1.94. I think we're going to come back down, and we're going to come back to this range again to 1.88. Okay, this is my little area right here where I like to see it come down even lower. But the good thing is we're still in this discount zone, right? So that was a nice area to sell. It's coming back a little bit, but I'm thinking a little bit more down on pound NCD. Okay. Now, pound NCD may come back a little bit up. So let me correct that. It may come up. If it breaks this high of 1.94, I don't see it coming higher, right? I think with the expected NCD strength, I think it's going to come up, maybe touch this 1.95. That could happen, and then boom, come down. Okay, it can even go a equal high, right? The other way, this is not really a great setup versus Euro NCD. Between the two, Euro NCD and pound NCD, I like Euro NCD better, right? This is a little bit more cleaner versus pound NCD. This peak was nice, clean. Gave it a nice little higher highs, higher lows. And now it looks like we're getting ready to break the structure here of 1.16. We break that, we're going down. If not, we may come back a little bit up. Now, it is a little bullish here, right? So let me make sure I put that. It is bullish here, but on this bullish candle, not bullish in terms of market structure, but I can see it come close, and then, boom. Okay. So you can expect Monday, Tuesday, maybe Monday, come up, maybe even Tuesday, maybe even Wednesday, and then we're coming back down. Okay. Between the two, Euro NCD and pound NCD, I like Euro NCD. Okay. CAD Swiss French. What we're looking at, look at this range, this nasty range. Come on, CAD. Could this be the week that we finally break out of this range, this nasty range, right? Between 0.69 and 0.6805, so 0.698. So could this be the catalyst? I think so. I am here. I am bullish on CAD Swiss French. Every time this thing come down, like right now, oh, this is buy. Every time this thing come down, buy. I'm telling you, I was looking at this since here. Every time it came down, buy. I don't care if it comes, just buy. Like right now, it's looking like a buy area right there, right? I'll be looking to buy. Now, Swiss French might strengthen a little bit. Don't get me wrong. Right, so let me make sure I put that clear. It may come back just to push just a little bit in this area, and then boom, we'll come back up. Okay, so we got to remember we got Swiss French CPI news coming right away on Monday London session. So that Monday London session, this is a bear candle. We took out this high, right? Well, not take out the high, but we've been meeting this high level right here. Look at that. Right, and this is kind of the low range here. So that's why I'm saying anywhere between here and here is where you want to buy. And I'm saying you would want to sell. The reason why you would not want to sell versus buying, because overall, the overall bias is bullish. So you would rather buy and not sell. Not to say you couldn't sell, buy, but in hindsight, you would never know, right? You would never know to sell, buy. Now in hindsight, sure, hindsight 2020 is always, right? You sell, buy. But we saw it from here and should have been buying since then. It came up, buy. It came all the way up. I thought it was going to break, and it didn't. Came back down, got that liquidity grab, came in here. If you would have bought it here, you would have bought it there, you would have been out. Bought it again, so get out. Bought it again, get out. Guess what? We're going to get another buy opportunity. So if you didn't buy anything in here, and if you want a great opportunity on a minor pair, This is a great opportunity because of all of this imbalance, all of this order block, and all of this imbalance here on a higher time frame. Let me go to the weekly. Take a look. This is the historical price of cash Swiss francs. Look at that. I'm gonna make a nice macro view so you guys can see it. This is the history of cash Swiss francs. Now, if you look at it from just like that, knowing that this was the high, this is the ceiling, and this is the floor, you want to short CAD yen? You should short it when it was up there, back in 2006. Not this year, not when it's looking down here. Okay, I mean, move this out. Look at it. It didn't break it here. It didn't break it here. And it's never been that low in history. Let me see if I can get more data here. ICE normally has more data. Let's see. Yeah, that's more data. Look at all this price point. Look at. This is back in 1982. Hope I'm talking to people who's over 35, 40 years old. 82. Price has never been this low before in the history since 1982. It came this low in January 2015. It came that low. And then we came again around March 2020. And we haven't been that low since. So that's basically the lowest. Let's put it that way. 2015. And it came close again. This is what I'm talking about right here. That was 2015. Then we came again. And now we came right there now. So you see what I'm saying? You see how that's supported there? So you think it'd be better to buy or to sell? I think that's pretty obvious, right? So that's why I'm saying liquid in this tight little range, okay? Now get this, when price, let's say you don't buy it, that's fine. Maybe that's not the pair you're trading, that's fine, and I'm perfectly okay with that. What I'm trying to say is that you can still learn from a trade you don't take, but at least you can be able to see the market behavior and see from a market structure standpoint why it would make sense to buy. Now, next month, 2 months, 3 months from now, I'm gonna bring this up, and then you're gonna see it, and you're gonna be like, damn, I should have bought it. So this is a good opportunity. That's an edge. To me, that's a market edge setup. Okay, let's go to Euro Pound. Euro Pound daily. What's going on? All right, market. What do you guys think? You guys see that? Do we have an SMS, a shift in market structure here? I think so. Let's go. Short that bad boy. All right, guys. All right, I'm bearish. Euro Pound. We're going to come back down there and we're going to see that price. Okay? Right here. You see that? We're going to come down there. We're going to see that. This is just one range in pairs. Okay? Shifting market structure, couldn't take out that high, couldn't take out that high, couldn't take that high, and we down there, going to take that high down. So what the hell? We're in a bearish, we're in a discount, so we ain't low enough, especially when I see this. Everyone see that? That's an imbalance, and that imbalance was mitigated about 16.82%. So we had this little mitigation before it took off. So it needs to come back and mitigate that whole thing. And then we'll come back, take here, and then we'll come back in that range. So I'm bearish, Euro Pound. Okay, let's go to some other minor pairs real quick, just to kind of show you guys what's going on. I don't like to trade these pairs because they range a lot. Not a lot of volume, not a lot of trading opportunity. There are some when I do see it. So on this one, pound switch French, guess what? That's right, I'm bearish. We're going to come back up. I'm bearish, pound switch French. From here to about 1.09, there's a nice little fair value gap. It's been mitigated over 1.45%. Come back down before we come back up. That's pound switch French. Odd CAD. Oh man, this was a nice trade. Anybody took this trade. Anybody. This was great. Jeez. All right. Pound CAD. Guess what? More downness. More down movements. Yes, sir. I'm still. This is it. This is my area, my medium probability area. All right. This is mitigation, that equilibrium right there. Let's see. That's my equilibrium price. And put that tag price there. 0.9807 equilibrium. We came close. It's looking kind of bullish with this candle. We think they're going to come back up here. As you guys can see, lower lows, lower highs, lower lows, lower high, lower low, lower high. Come back down. Let's come into my premium. Come somewhere in here. This is where I would like to see it. Now we have some imbalances here. Yep, right there. Oops. Where'd that come from? All right. Right there. Right there. Do I see it coming that low? No. I don't see that coming that low anytime in the future. Let me see. No, not right now. I don't see it coming that low yet. You know, we came all the way down here. We came all the way back up. It all depends on what odd and CAD wants to do. Okay. Now, this was a nice high that it did not take out. There's some highs here, it's high here, high here. There's a nice low down here. So other than that, I don't see that coming in the future yet until we break this low. But as of right now, I know we're coming this low. There is some nice balance here. This is the nice high probability setup here. So nice medium probability here. So we got more downside for odd CAD, okay, especially with the upcoming currency strength. Now, having said that, odd had a bank rate decision, right? Just as much as CAD does. So odd is first, so this can come up, okay? So do not be surprised if it comes up to about 0.93. So I am short-term bullish, and then we're coming back down. We are not coming here. That's not going to happen. Pull up, pull back, CAD news, CAD rate, and then more non-farm payroll CAD news, positive news. This could be the catalyst to take it down, okay? All right, that's odd CAD. NCD CAD. Ah, look at that. What is that? Ah, all right. Let's take this bad boy out. And then we'll come back down. Okay. That's what I'm seeing right now. Okay, we got a nice lower block right there. So that's the way market does. It just takes out liquidity, rebalance. Takes out liquidity, rebalance. That's what the market always done. That was a shift in market structure right there. Couldn't take out that takeout. Boom, came back down. And we got this nice liquidity grab here. We got a nice fair value gap still sitting down there. That's eventually going to happen. If I can get this right. There you go. Okay, got a nice imbalance there. And you got a couple more imbalances down here on the daily as well. Okay, so we are going to come back a little bit more. We may take this out, we may not. To me, it's a high probability we will this week. But if we don't, and we come back right here, we are come back down. So short term, I am bullish in CDCAD. I like to see it come back to right there. Let's see, from a price perspective, 141 pips. And NCD-CAD is like a 40, 50 pip range. So that's like 2 to 3 days of bullishness. So if it doesn't come and break this high right here, and that high is 0.85, then we're coming back down. But I like to see it take out this. But other than that, I am a little bullish on NCD-CAD before we are bearish, okay? And this bearishness, if we don't come up, so it depends on how far it comes up by, let's say, Wednesday. So by Wednesday, if we don't see it, look for that reversal on Wednesday, and then Friday, continuous, okay? Okay, odd switch France. A little bit of maybe a bearishness here, and then we'll come back up. Okay, it's having a hard time breaking that low from a liquidity standpoint here. Okay, so if it doesn't break that 0.62, I see our switch France coming back up. So that means on Monday, switch France take a little bit strength and then come on Monday night. So Sunday, a little bit down, London session, then Monday night, boom, take this back up. Switch France. Again, I really don't like this pair. It's not really a good setup there. So that's switch France, but it's a minor. Some people like it, some people don't. So therefore, same thing. I expect a little bit of bearishness here, then come back up, possibly there. Or we may see, for me, I just see it this far from here. Okay, get this low. You see these Swiss francs. Yeah. Yeah, we could see that somewhere here. Dollar Swiss, so Swiss francs is going to be strong. Swiss francs going to be strong against the yen, so I can see Swiss francs ranging with NCD. So NCD Swiss francs will probably both be strong. So I do expect a little bit in this range. If we break, and this is where market starts to come in. If we break 0.57 on Swiss franc, then we're going lower. If we hold like it's been holding here, I don't suspect us going any lower. Look at that. If we hold here and it comes back down, which I do expect it to come down, if we don't break this, then we're coming back up. Okay, and then we're going to be in this nice little range. Let's say it comes back down, it holds, then we break 0.58, then this is going to look like this instead. Okay, so it's all going to be based on this breakup structure here. We break that, we're coming right down. We don't break that, then we're coming back up. Okay, it's NCD Swiss francs, odd NCD. Where you at now? Okay. Oh, wow. Okay. I'm bullish. Odd NCD. Okay. So I would say we'll probably come back up here to equal high with the bank rate decision on odd, and then I can see it come back down. Okay, odd NCD. I'm bullish on odd NCD. US Swiss francs. Ooh, this is awful. Swiss francs. All right, we're coming right down, guys. Right here. And then we'll come back up. Okay. So Swiss francs come a little bit down. US Swiss francs. I like to see it come all the way up here with this mitigation to this order block, real big order block up there. However, I do expect a little bit Swiss francs. It could even come as low as this if we break this structure. But right now it's been holding right there. It's been holding that price of 0.984. Came here, hit a W, came up here, liquidated. That was a nice SMS right there. Come back down. I do expect this to come down, fulfill that value gap, come to this order block. So if it doesn't break this low, it's not going to down here, but if it look like it's going to hold long term, I would expect euro to eventually pick up strength. Right now, that doesn't mean it won't do this. Or it comes back up. But overall, this is where I'm looking for in the future. I'm looking for US Swiss francs long term to be bullish. Okay, but right now we had that look. We had that shift in market structure, that liquidity grab. Let's come back, do that a little more liquidity. If it breaks this structure and it fails to hold, then we're coming back down to this before we come back up, right? Basically, if we break this, then we're coming back down, and it's going to look like this. Come back, we'll come hold those two areas, and then we'll come back up. Okay. Swiss francs is one of those pairs I don't trade as well. Not a lot of volume, not a lot of opportunity, a lot of manipulation, a lot of ranging. But that is what I have, and that will conclude our top down. Is there any questions for anyone here? Anything I didn't go over? Take a look at oil real quick. What do you guys think? Nasty, isn't it? Ranging. Look at this nice ranging up and down, up and down, up and down, up and down. Okay, so what CAD expect a strength though? I do expect this to come up here to about 0.82. Okay, if I was to call oil, I'd be bullish oil. Obviously, I would have been bullish down here. Right there, right? This is where I'm looking for oil to come up to. Okay, I like to see oil come up here. Could it come here? I doubt it. I don't see oil coming that high, 0.87. I think we're going to be in this range, and then we're eventually going to break this range, right? However, I think we're going to break this range to the downside. In other words, we're going to come up, come back down, and eventually we're going to come down here. Okay. I like to see less demand on oil, but we're going to see that with just the energy sector. It's all based on supply and demand, right? So as long as there's less supply on oil, travel, things like that, oil uses gasoline, then I don't suspect to see oil going any higher. I do expect oil over time. This is where I'm expecting to see oil come back down to 64. So just to say that every time oil pop, I would be more inclined to sell it versus buying the bottom, okay? So every time it dropped, I would be less inclined to want to buy it. In other words, I don't trade both sides of the range. Pick one. And I pick it based on my bias. That makes sense? So whatever bias I'm on, which I'm more short-term, I'm bearish overall, right? Is the reason why. Take a look at the market structure. Okay. I see us coming down here. Not all the way down here, but I see us coming down here before we come back up. This is Putin invading Ukraine, and we've been down on this barrel since then, right? So until the economy recover, I'm expecting less demand on oil, right? So I am expecting a little bit of bullishness. Do I see oil coming this side? Oh no, not right now. I see oil coming down lower. So as it peak, as soon as I see it, my signal to show me that it's peaked and it failed to break and it does a liquidity grab, I'll be looking to short it because of the fact I am bearish bias, right? Short, I'm short bias. So this would be a good area to short. Short, it would have popped, I would have short, popped, I would have short, it's popping now, I'm getting ready to short, right? So the tactic is probably looking like this. So as the tactic gets up, momentum, peak, oversold, we'll be looking to short it, okay? All right, everyone, that's oil. All right, guys, I'll have this on the recording. This will be available on the YouTube channel as well to everyone. Hope this helped you guys, coaching students. I'll see you guys on Tuesday, live trade room. So we can take this and take this down to a lower time frame and take advantage of the dollar bearishness up leading up into non-farm payroll to at least get a few days of trading. And then next week is where we're going to trade the aftermath and get a lot of volatility, which we are expecting some dollar strength. Okay. Other than that, guys, enjoy the rest of your day. Thank you for coming, and recording will be up shortly. Bye-bye.